Half time. Cameron Peacock joins us from IG in Melbourne now. Cameron, good to see you there. What do you think? What's the IG call for the Oz Market Open?
Yeah, good morning, Bridie. Look, we're looking at another fairly lacklustre session for our market today. We're currently calling the market down about 4 points or 0.1% around that 44.77 level. Global markets had a very strong third quarter. We really seem to be in a bit of a holding pattern at the moment, trading at the top end of our current ranges, but just, waiting for that next catalyst. We've got the presidential elections coming up. We've got interest rate decisions here next month. We've got the fiscal cliff towards the end of the year. So I think, stocks really just in that holding pattern at the moment. Overnight, we did see a little bit of weakness in Europe. We had the FTSE down about 0.5%. We had the CAC and the DAX both down about 1.4%. Of course, we've got European finance ministers meeting in Luxembourg at the moment to discuss Spain's finances and also closer banking cooperation. There's still a lot of uncertainty over when and if and when Spain will request a formal bailout package from the EU. That uncertainty clearly weighing on stocks last night. We did see the euro also slipping about 20 points over the session. Saw a little bit of weakness in the US last night. We had the Dow Jones down 0.2, the S&P down 0.4, the Nasdaq down 0.8. Again, stocks really just going through the motions last night. Light volumes due to Columbus Day, and there's also a little bit of market jitters ahead of the third quarter earnings season, which kicks off tonight with Alcoa reporting after the bell in the US session. Expectations heading into the earnings season are that we will see across the S&P 500 earnings falling 1.7% in the third quarter. That would be the first quarterly decline since 2009, and that stat alone has a few people a little bit hesitant about buying up stocks, particularly after that good third quarter. So, looking ahead to today's session, I really just see our markets going through the motion. We don't have any real economic data out. We had the US dollar slightly firmer last night. We saw the base metals complex a little bit weaker, but we do have BHP's ADR called up about 0.6% on the open, perhaps being boosted by iron ore prices, which were up about 6% last night to $110 a tonne. So, a fairly lacklustre session ahead, I would think.
Just seeing some headlines coming through. We've already had the World Bank come out and lower its forecast for economic growth out of Asia, in particular, warning on China. Now the IMF also bringing back its growth forecast for China down to 7.8% compared to the 8% it had seen previously, and now saying that China's GDP should be 8.2% in 2013. Sharp revision downwards for the Indian economy, expecting now GDP growth for this year of about 4.9%. Had previously expected about 6.1% growth for this year. What do you think of all of this? I mean, is this really new, what we're hearing from the World Bank and the IMF in terms of these concerns about the slowdown in Asia, in particular China?
Look, not really. I've never been one to pay too much attention to World Bank or IMF forecasts. I mean, they're just numbers. It's about as relevant as you and I downgrading our own personal estimates. It means nothing in the context of things. As I said, it is just a number. I think everyone was expecting some downgrades. Everyone knows that China is slowing somewhat. I mean, they came out, if you recall back to 6 months ago when they came out with their 5-year plan, they revised the target number or their growth number from something like 8% down to 7.5%, and the market got into a bit of a tailspin over it for a couple of days or a week or so, and then it moved on. I mean, bringing it down from 8% to 7.8%, I mean, who really cares? 7.5% is the number that most people are sort of drawing as the line in the sand. Whether it's a couple of or a fraction of a percent either side of that, I don't think it really matters. I think everyone knows that China is slowing down and are positioning themselves accordingly. So the actual numbers and the actual downgrades by the IMF last night or yesterday really pretty much expected, and I don't think it's going to have too much of an impact on the market today.
I think the IMF's just saying, I'm just seeing here on Reuters, that there's this general feeling of uncertainty holding back global growth. Is that really the crux of the whole problem? That that there's the business and consumers just there's no certainty there, there's no confidence there, and really that is going to hold back, well, certainly equity markets and other markets too. Do you think certainly into the start of next year?
Yeah, absolutely. I mean, the uncertainty is the key word. I mean, we've got the US elections coming up. That's providing uncertainty in the US. We've got the situation in Europe, which has been playing out over a couple of years. No one really knows how Europe's going to look in 2 or 3 years' time. We've got in China the political handover at the start of next month. That's adding an element of uncertainty. So all of those things are really playing on investors' minds at the moment. And as we know, investors hate uncertainty, and that's part of the reason for this caution at the moment. I mean, you want to see corporate earnings growing strongly. We are going to get some glimpse of that or otherwise in the next couple of weeks in the US earnings season. So that's certainly something that investors are looking at. And there's a lot of people also talking about the fact that these markets are really only being supported by stimulus measures put in place by the Fed Reserve and the ECB. Where would we be at the moment if Ben Bernanke hadn't announced QE3 a couple of weeks ago? Where would we be in Europe if Mario Draghi and the ECB hadn't come out with their bond buying program? A lot of people are just saying this economy is just being held together by stimulus, and that may well be the case, but it is what it is. I think if we can get some certainty over the next couple of months as to what's happening in the US with their direction under the Republicans or the Democrats, if we can get the new Chinese government coming in and maybe laying the foundation for some more stimulus programs and putting China back on a growth path that the global markets are happier with. If we can get Europe showing some signs of stability, then we could head into 2013 on firmer footing.
Great to get your thoughts as always, Cameron. Thank you so much for that.
Thanks, Bridie. Cheers.